Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an amazing day today. Jerome Powell has dropped the interest rates down 50 basis points, and we have seen a strong move upwards for Bitcoin. And this move is probably just getting started as Bitcoin is currently breaking through key horizontal resistances. In today's video, we're going to be discussing the next targets for Bitcoin, what the 50 basis point reduction means for the macro price action, what you should be paying attention to in the short term, and how those daily and weekly charts are developing. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you were interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you were interested in taking your trading to the next level, you can join us in VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to all of our group chats, our general chat, our trading chart education chat, our news, daily video help, and trade setup chat. If that is what you're interested in, go ahead and contact me in the pinned comment by clicking my name in the pinned comment right over here, or these links for more information. And without further ado, guys, let's go ahead and get stuck into it. So as we can see, Bitcoin has seen a fair amount of short-term volatility upon the release of the interest rate data. And on the short-term price action, as we are speaking, Bitcoin is continuing toward the upside, currently testing and touching that $62,000 mark. Alongside this, we have officially seen a daily candle close above the mid-level of the descending channel, and we are coming very close to a potential weekly breakout on that RSI in 4 days' time. So a lot is happening on the short term here and on the higher time frame that we're going to be discussing, and most importantly discussing what is happening and what you should really be paying attention to, where Bitcoin could potentially go, and what are the trigger points and what are the invalidations. Jumping into the market data, 24-hour volume has taken a bit of a surge, and that is expected around these news events. 17% up in the last 24 hours of volume, jumping up to 153 billion. 24-hour liquidations at 172 million, up 31%, with long liquidations sitting at 79 million and short liquidations sitting at 93 million. Moving over to the broader market, so DXY has seen a short-term correction upon those rate releases, but not too much movement on the actual higher time frame, still sitting very much above that key horizontal support level at 100. Again, a loss of that 100 point will result in strong corrections on the macro toward the downside. This would be very bullish for risk assets. Looking at the DXY again, we do have our overall yearly uptrend represented by that symmetrical triangle, which we have broken down from. So for the DXY to become bullish again, we would need to see the price reclaim that level. Moving over to the S&P 500, we have seen a little bit of a short-term pullback following the interest rate release, but overall the weekly chart is still looking very strong, retesting that weekly high. For macro continuations higher, we are very much looking for the continuations above that 5,700 level. If we do get that weekly close above, we will be expecting continuations up to 6,000, if not more. Again, while we sustain above 5,300, we are bullish and we are expecting continuations. A drop below this level could potentially result in macro continuations downward. We're going to go ahead and jump into the rest of today's analysis. I want to keep the intro nice and quick. We have a whole bunch to discuss, as we just mentioned. But before we do, a quick word from today's video sponsor. If you were interested in supporting me, supporting the channel, and getting up to 15%, if not 45% discounts on your trading fees, you'll get that lifetime 15% that can build up to 45% trading fee discounts. Sign up to the links down below, BitUnix, BitGet, or BingX, using the links in the description, and we'll jump back into the video. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into it. First and foremost, interest rates have been reduced by 50 basis points. The Jerome Powell Federal Reserve press conference, they did talk about the possibility for further continuations downwards, stating that they're looking to do 4 more interest rate reductions in the near future. Whether that be 25 basis points or 50 basis point reductions is unclear, but we are expecting at least 4 more. And as we know of the Federal Reserve, generally when they do say something, they either go back on their word or they completely alter it. So I'd be expecting to see possibly even more than 4 interest rate reductions over the next coming months and quarters. If we take a look at the interest rate reduction from a macro perspective, we know that reducing interest rates in the economy is a way to not only increase inflation, decrease the cost of a dollar, but inherently push up asset prices. By reducing the interest rates, we see again the debt to service ratios and cost of debt in the economy decrease. This facilitates a scenario where available household cash flow increases as debt to service ratios, or the amount of money you need to pay towards your debt obligations, go down, which increases available cash flow, which increases the ability for retail to invest in assets. From a company perspective, again, their debt to service ratios decrease, increasing their cash flows on their balance sheets, as well as facilitating them to acquire cheaper debt to purchase income producing assets against what would be a falling dollar as inflation is increasing as a consequence of interest rate reductions. So on the macro scale, we know that interest rates falling are bullish. If we look at historical interest rate cuts, we can see in September 84, 87, and 2007, we saw interest rate reductions of 50 basis points for the first cuts. In only one of those 3 scenarios, we saw a following recession. And the 2007 scenario was actually the global financial crisis. So what we saw in that particular instance is we saw a month prior to that interest rate reduction of 50 basis points, we saw the global financial crisis initiate. So the interest rate reduction was kind of like a fire hazard method, take out the extinguisher, try, stimulate that economic growth again, try bring the economy back up from that looming risk of a recession due to the global financial crisis. But of course, that didn't really work out, as we did actually go into recession during that period. But the fact of the matter is, according to the historical data on interest rate reductions, and according to our price action data from when we see those interest rate reductions moving 12 months in the future, we haven't seen every single reduction lead to recession. In fact, the only notable scenarios where we saw macro drawdowns had black swan events, such as the dot-com bubble. We had the dot-com bubble. A month or 2 later, we saw interest rate cuts. We had the global financial crisis. A month or 2 later, we saw interest rate cuts. In both of those scenarios, which are commonly used to suggest that interest rate reductions result in economic recessions, undergo the simple and well-known thing, which is simply just correlation is not causation. And that is that, guys. Correlation is not causation. We do not think we're going to see economic recession. And if we do, it is not a direct consequence of interest rate reductions. As we know, interest rate reductions are inherently bullish for risk assets, according to the mechanisms behind money flows in and out of the economy. So taking a look at Bitcoin now, as we can see, the weekly candle close, 4 days time, if we can sustain at this price, or go higher, or even go a little bit lower, but sustain about that midline, we are primed for the first. This is the first in 200 days. Bullish momentum flip on the RSI. And I can't stress how important that is, guys. If we take a look at prior bullish momentum flips out of consolidation ranges, such as this range, we saw the bullish momentum flip occur on this candle. 1 candle later, we saw macro continuations right over here. We are seeing a very similar pattern play out in this instance. It is still a horizontal consolidation. It is a descending channel. So it is a descending channel, so 2 parallel trend lines instead of just horizontal. It is a similar structure. We are seeing the similar accumulation and, of course, bullish momentum developing, which is simply bearish exhaustion over the course of 200 days. If we are able to see that official flip of this RSI on the weekly, that would indicate momentum is flipped positive, and we are likely going to see a continuation higher to at least retest the descending trend line of this macro consolidation. Fantastic news. Moving over to the daily chart, we can see, first and foremost, Bitcoin is breaking out, or it has broken out and closed a daily candle above the midline of the descending channel formation. This is a great indication of strength, and as we can see, prior instances of when we have closed above the midline, particularly here, notably here, we have generally seen continuation. As I say generally, because this instance didn't really result in a continuation, but we have generally seen continuations to the range high, and that is something of notable significance. Therefore, we are watching that midline now as a potential level of support if it were to be retested on the daily for a potential bouncing point. On the daily chart, we are still looking strong. For us to actually see a bullish flip of this consolidation, we need to see a daily candle close above the range high of the descending channel. Prior attempts have all failed, and this not only counts for the range high, but the range low. We have not closed a daily candle outside of this consolidation during the last 200 days, meaning not a single candle that has breached the resistance or support has closed under or above on a daily candle. And therefore, we will be waiting for a daily candle to validate that this structure has been broken, as a daily close will be a piece of data which is an outlier from the rest of the rejections and bounces that we could use to potentially increase the justification or increase the probability to see that continuation. So we're waiting for the daily candle. Again, a daily candle close above the range high is what is required for us to see continuations into 80,000. The reason we say 80,000 is simply the depth of the channel applied to the projected breakout point takes us to an expected target, 82, 83, 84,000. And of course, for us to invalidate this structure, meaning the bullish accumulation will be invalidated and we will see a macro continuation downwards, we would need to see a daily close below the low. Both of those scenarios are possible. The likeliest scenario is still the directional continuation upwards, as a descending channel formation has a greater degree of chance for a macro continuation higher. Additionally, if we take a look at the daily chart, we can also see we have a descending trend line spanning from that prior retest, dragging through, and we can see we've actually broken out of this downtrend over here, marked out by this descending trend line, which is at a confluence point of the midline, a very notable point we should be paying attention to, again, acting as a potential support if retested. But let's jump over to the short-term price action. This is where the action is happening. This is what everyone cares about. Let's jump into it. So as we can see, guys, that same downtrend we just talked about is right over here. That is that downtrend we have broken out from. If we take a look at the short term, we have a few notable levels I want to discuss. First and foremost, we have got our uptrending support as per this diagonal trend line. Let's go ahead and get rid of this indicator for now. This diagonal trend line is going to be our uptrending support. We have 1 retest, we have 2 retests, we have 3 retests on this uptrend. This uptrend is going to extend indefinitely until retested or potentially broken, a key level we will be watching in the future if it is retested again. While we remain above this uptrend, Bitcoin is bullish. It is simple as that. We are in an uptrend, and again, while Bitcoin is an uptrend, we are bullish. It is literally as simple as that. So we are not expecting continuations towards these lows over here, 57, 55, unless this trend line is broken. So we could see a continuation of retest, but unless this trend line breaks down, these lower levels are not really in the realm of possibility at the moment. If they are able to break down, we would then expect those levels to be possibly reached. But what we are seeing right now is a flip of a major resistance. If we draw in our prior horizontal resistances, we can see this level of resistance right over here. We are breaking out. The prior time we broke out of this resistance right over here, we saw a strong continuation up to 64,000. And therefore, we are expecting that same move to occur provided this level of resistance is able to sustain. Again, we have seen multiple attempts to break out, which resulted in wicks back down. So we could potentially see something like that play out, but while we are above this level, we do have higher targets. Again, guys, that is going to be the short term. There is no need to overcomplicate it. We are sitting above a resistance. The prior time we broke out, we saw continuations. The next horizontal resistance is sitting at 64,000. We have the VRPV reducing up until that point, and therefore we are looking for 64,000 targets, provided this uptrend is able to sustain. The loss of this uptrend at any point will result in a downtrend forming, which could potentially take us to retest these lows. Worst case scenario, back into these 55k lows. However, I do not believe that is very likely. We'll have to see how that weekly candle closes. Moving over to the total market cap for both altcoins and the total is looking good. The altcoin total market cap is looking particularly strong. Let's go to a 3-day chart right over here. Where is our 3-day chart right over here? We can see we have broken through a midline. We are looking good. We are primed for a continuation up to that range high. Again, only upon the breakout of that range high will altcoins really start to gain some strength. Looking at the total is also looking quite fantastic, respecting the same formation of which Bitcoin is in. And if we move into Bitcoin dominance is breaking up slightly again. Not too fantastic for altcoins. If altcoins do want to move into a more of a parabolic phase, we'll need to see that total decrease. Overall, guys, the market's looking strong. The interest rate reduction had a positive effect in the short term, surprisingly, okay? And the macro outlook for Bitcoin and the asset market is good, provided the Federal Reserve stay true to their word and continue to reduce those interest rates in the following quarters and following FOMC meetings. Furthermore, the short term is looking pretty steady, pretty stable. We're breaking through some resistances. There are some key levels to watch out, of course. At the moment, we are looking for upward continuations and simply managing our risk as the price moves higher. If we do get those invalidations, because we know all diagonal trends eventually break, but if it breaks over here, the consequence for a lower continuation is greater than if it were to break up over here. So we are looking for, again, when that trend line does break, we will then be looking for corrections and then be looking for shorts. Thanks for tuning in, guys. Hope you have a fantastic day. Catch you in the next one. See you then.